Hey there, future millionaires. Ever wondered why the stock market feels like riding a roller coaster with a blindfold on? Well, buckle up, because today, I'm taking you on a wild and hilarious ride through the ups and downs of the stock market. So, let's start with a little history lesson. The stock market has been a money-making machine for decades. The S&P 500, that magical list of the top 500 companies, has averaged over 10% annual returns. That's right, folks. If you had invested in the stock market, you'd be swimming in cash like Scrooge McDuck. But hold your horses. Before you start dreaming of yachts and private islands, remember, past performance doesn't guarantee future results. The stock market is like that unpredictable friend who shows up late to every party. You never know what you're gonna get. Now let's decode the magic behind these market movements. Imagine the stock market as a symphony with economic growth, interest rates, corporate earnings, investor sentiment, and geopolitical events all playing their instruments. Sometimes it's a beautiful harmony, and other times it's a toddler banging on a drum set. When the economy's growing, companies make more money, and stock prices go up. It's like when your favorite band releases a new album and everyone rushes to buy it. But during a recession, it's like the band's lead singer decided to pursue a solo career, and their album flops. Interest rates are another key player. Set by central banks, they determine how much it costs to borrow money. Think of it as the price of admission to the stock market party. Lower rates mean more people can afford to join in the fun, while higher rates can scare off potential partygoers. And then there's corporate earnings, the lifeblood of the stock market. Strong earnings reports are like a standing ovation, boosting investor confidence and driving stock prices higher. But a disappointing earnings report? That's like a comedian bombing on stage. Crickets. Now let's gaze into the crystal ball and see what the future holds. Experts predict that US stocks will average between 4 to 7% returns over the next decade. It's like going from a thrilling roller coaster to a kiddie ride. But hey, a ride is a ride, right? Despite the anticipated slowdown, the stock market is expected to keep climbing. Technological advancements, globalization, and demographic trends are like the fuel that keeps this engine running. So don't panic. The party isn't over yet. The best advice for navigating the stock market: diversify your portfolio like you're picking a team for dodgeball. Spread out your investments to avoid getting hit too hard by any single stock. And remember, a buy and hold strategy is like marinating a steak. The longer you wait, the better it gets. So, there you have it. The stock market may be a wild ride, but with a good sense of humor and a long-term perspective, you can enjoy the journey. Thanks for tuning in, and don't forget to hit that like button and subscribe for more hilarious insights into the world of finance. Catch you later, future billionaires.